The question is, so what happens to the Bitcoin price when this thing called the halving happens? And I want to tell you a little history. So I've written it down, so I'm going to have my cheat sheet here. But the Bitcoin halving, this is going to be the fourth Bitcoin halving. And the first one, you'll find they're about 4 years apart. The first one was in 2012. The next one was in 2016. The next one was in 2020. This one is in 2024. Very good reason for that. Again, hang on for the last segment. Hey, I'm Pam Pryor, and this is the Cash Flow Podcast. We're going to talk about everything related to money in your business. Without further ado, let's hop right in. And welcome back. Today in our brew section, we're going to be talking about Victory Dirtwolf Double IPA. Lots of news on that. Then in the actual news section, we're going to talk about the Bitcoin halving, which you may be hearing some buzz about. And in the Bucks section, we're going to dive into what that's all about. Bitcoin, the blockchain, the halving. Why might this be a worthwhile investment? Why might it not be? See you soon. And you're back for brews. Today, I'm really excited because we're covering a beer called Dirtwolf Double IPA from Victory Brewing Company. Victory Brewing Company is a hometown brewery for us. It's in Downingtown, Pennsylvania, which is very close to where we live. And so all over Pennsylvania, you always see Victory beers. I'm an IPA drinker, and they have a couple of really good IPAs, and we're going to dive into one today. But I love the story about this brewery. So Bill Kowalski and Ron Barchett apparently met on a school bus when they were in 5th grade in 1973. So this goes back a ways, right? And in 1996, they formed Victory Brewing Company. They had a great friendship all the way through school and high school. They went to different colleges on opposite coasts, but they had this common hobby of brewing beer, and they came back together after college and decided to go ahead and start Victory Brewing, and we're really glad they did. So it's since then now almost hit its 25th anniversary, which is just astounding, and it's also won prizes all over the place. And not only is it the second largest or most drunk beer in Pennsylvania, brand in Pennsylvania, but it's also making tracks all over multiple states. So big deal, Victory Brewing Company. You've probably seen it in your own store, but it's very much a favorite of ours. So diving into the taste, I have a glass here and I have the beer. So let's do a pour. There's the sound we love. Let's see what we got here. Just pour a little bit there. You'll see I got the huge one. Couldn't help it. So here we go. Let's take a peek at that. Got a good look at it? Okay. Francis is happy. It's pretty clear. I can see through it, which is nice. I know I like this beer, by the way, so I'm kind of cheating that I'm tasting it for the first time. I'm not. The smell's very like flat beer. It's not really aromatic with lots of citrus and stuff in it. It smells like a tiny, tiny bit of orange is what I pick up in the smell. Now let's see what the taste is like. Wow, that is so good. I'm sorry, but that is so good. I'm reading the back as I'm sipping it, and the back says, and I think it nails it, untamed howling hop flavor. If you don't like IPAs a little bit, this is not for you. The strong pack of American hops immerse in an aggressive dry hopping to deliver intense aromas and flavors of citrusy, earthy tones. Now, what I will tell you is of all the IPAs I know, this one leaves the IPA taste as long or longer than most any other IPA I've had. I happen to like the taste, but it's kind of like black coffee, I think. I think it's an acquired taste, maybe. But this is delicious. So on the Pam... What do we call it? Pam?
PBKPI.
PBKPI, Pam's Beer KPI, which is a scale of 1 to 5.
1 to 10.
Darn, 1 to 10. This one has to, let me just double check. I give that one a solid 8. It's really good. Don't drink it if you're not an IPA drinker. The double IPA, it is double hopped. It is really poppy, like it pops in your mouth. There's no like smooth ending or anything. And I will tell you, if you don't like grapefruit, this would not be a good beer for you. There's definitely a grapefruit type taste that's left in your mouth. So that's it. I'm happy. Go out and enjoy yourself a double, hang on, I got to get the name right totally. Dirtwolf double IPA. Cheers. For our news segment, we're just going to cover what's all over the news if you watch any kind of financial news. And in fact, even on the main news stations, even not in the financial sections, they're talking about this as well. And it's the Bitcoin halving, Halving. And I'm going to go into depth in our next segment on what that is and what it's all about and what you need to know about it as potential investor or trader. But right now, I just want to talk about what's happened in the past when these halvings have happened. Like I said, we'll explain it. You have to hang on. I'm bribing you. You have to hang on for the bucks section. But what's interesting here for the news is this is coming within the next 8 to 10 days. And it's very predictable. We don't know the exact moment it's going to happen, but it's very predictable because it's a set thing that happens, and we can predict when that thing's going to happen. And it's going to be between now and 10 days from now. And what will happen is, in short, and again, hang on for the bucks section, we'll go in a little more detail, but in short, what the workers in Bitcoin make in the number of Bitcoin they can make doing that work will get cut in half. And it all makes sense when we put it together in the bucks section. But for now, the question is, so what happens to the Bitcoin price when this thing called the halving happens? And I want to tell you a little history. So I've written it down, so I'm going to have my cheat sheet here. But the Bitcoin halving, this is going to be the fourth Bitcoin halving. And the first one, you'll find they're about 4 years apart. The first one was in 2012. The next one was in 2016. The next one was in 2020. This one is in 2024. Very good reason for that. Again, hang on for the last segment. But here's what I want you to know about the price around the halvings. So when the first halving happened in 2012, the price going into the halving was $12 per Bitcoin. After 300 days, the price was $135 per Bitcoin. Okay, no big deal. In 2016, going into the halving, the price was $658. 300 days later, the price was $1,551. Again, pretty good. 2020, our COVID year, ironically, going into the halving, the price was $8,601. 300 days later, Francis, guess what the price was?
$35,000.
$50,941. So in that halving in 2020, the price went from $8,601 to $50,000. $8,601 to $50,941. So it increased by, let's just call it a little over 5 times. Okay? Going into this halving, the price is $65,000. Now, there are people who are saying, oh my God, the price went 5x last time. It's going to go 5x this time, and Bitcoin will be worth, $350,000 in 300 days. I think that might be a little overkill. I think that may have been exactly the right timing for a lot of reasons for that to sort of be the biggest exponential growth. But let me clarify all this, and I know my producer will put a lovely statement on this with a disclaimer. This is not investment advice in any way. I may tell you what I might do, but it's not investment advice, okay? So let's make sure that's very clear. But what you need to know is within 10 days, something's going to happen in Bitcoin. And the last few times it has happened, the price has gone respectively from $12 to $135, from $658 to $1,500, and then from almost $9,000 to $51,000. So shit happens when this halving happens. Again, nothing's predictable. This is not investment advice. I'm just saying a similar thing's about to happen. Now, every set of circumstances is different. There is no predicting accuracy. Playing in Bitcoin, playing on the blockchain is playing in the Wild West, as my friends at Bankless say. But still kind of cool to know This is coming and it's happening. So one of the things I've done actually, as you know, Francis, is I've started this Bitcoin for Traditionals club where it's free, but I'm just giving people little action items to do every night to get a little further invested or not involved in Bitcoin and understanding it in this crypto world as they want to. And so this news is particularly relevant to them, but also to anybody holding Bitcoin or, quite frankly, anybody even remotely curious about Bitcoin. I think it's going to have it peaked right now. Many years after the very first Bitcoin was mined in 2009. It was called the Genesis block, and it was mined in 2009. And we're going to talk a lot more about this in our Bucks section. So if you want to really understand what's going on here and why you may have something to think about, hang on for our next segment. Okay, so now that we're here on the whiteboard, there are 3 questions we need to answer for any of this to make sense. 1 is, what is a block? 2 is, what is a miner? And 3 is, what is a reward? And very simply, I'm going to give you a sentence that we're going to unravel here. Every block that is created on the blockchain is created by a miner. And for every block that a miner creates, he gets a reward. He or she gets a reward. So that's what there's. A block is a block on the blockchain, which literally looks like this. There's a block, then there's a link to another block, then there's a link to another block, and then there's a link to another block, and then there's a link to another block. So on and so forth. And there's no way that you can have 2 approved links out of a block. So this will never happen, that there'll be another block over here that actually becomes part of the block chain. Okay, so let's just X that out because it's never going to happen. But each of these blocks has to be mined. And what does mining mean? You've heard all the bad stuff about the electricity that it uses, etc. I will let you know that it uses no more electricity than regular federal banking does. That's a little bit of a PR thing from the feds to keep you away from non-US denominated cash. A little bit of an opinion there, but I'm throwing it in. So when a block is mined, it's mined by somebody called a miner. Not a miner as in under 21 years old or 18 years old, but a miner with an E as in mining coal. In this case, they're mining blocks of the blockchain. And what that means is as transactions are added related to Bitcoin, every so many of them get grouped into what's called a potential block. And we're just going to mark that here in green because it's not real yet. It's a potential block. And what happens when that potential block gets created is a whole bunch of miners start trying to, quote unquote, solve it. And what does solve mean? Basically, there's this weird math hashtag, hex, whatever you want to call it, hashtag, but hex, hash, number thing that has to be solved. And the only way to solve it is to throw a computer at it and have it just randomly generate a bazillion different options for the answer. And so a bunch of miners go in and start trying to solve for this one single block of data that might have 30, 40, or 100 transactions in it. And one of them wins. One of them actually creates the thing that makes that block finalized and set in cement. When they do that, that block is all of a sudden mined. And we've created a block on the blockchain that is irrefutable, that will be there forever, and is definitely considered part of the Bitcoin ecosystem blockchain. Now, the miners get a reward for doing that. When they win, they get a reward. They've put a lot of money into the equipment and the computers that allow us to solve for the blocks, but they get a reward. And I should actually erase these little dollar signs here because what they get rewarded in are Bitcoin. And starting in 2009, when this whole thing started with what they call the Genesis block, that block paid 50 Bitcoin for that work, for that miner. And then all the way up until 2012, every block that was mined, the miner got $50, or 50 Bitcoin, 50 Bitcoin, 50 Bitcoin. In 2012, though, at the first halving, all of a sudden they went from getting 50 Bitcoin per to 25 Bitcoin per. And at the second halving in 2016, They went from getting 25 Bitcoin per block they mined to 12.5 Bitcoin per block they mined. And then in 2020, which was the third halving, they went from 12.5 to 6.25. And that brings us to today, when in April of 2024, the reward for them went to 3.125 Bitcoin. Now, you're probably sitting here saying, wait a minute. They bought expensive equipment. They still have to buy expensive equipment. And they used to be paid 50 Bitcoin, and now they're paid 3.125. Well, yes. And here's why and why it works. One of the things that Satoshi, who is the guy who invented this whole blockchain Bitcoin thing, wanted to make sure of is that the number of Bitcoin would stay limited. And he wanted it to stay limited at 21 million Bitcoin. There will never be more than 21 million Bitcoin created. Minted is what it's called. And every time the reward is given to a particular miner, like right now, before the halving or after the halving, let's say, they're getting 3.125 Bitcoin every time they mine a block. So they're minting 3.125 Bitcoin. Well, that's only going to happen up to 21 million. Now, that time doesn't come till 2134, or 2140. I think is when they think they're going to finally run out of Bitcoin. But the weird thing is that's a very exponential curve. And right now we're already at 19 million of those 21 million. And it's because of this halving. So let's circle back. Why would somebody do this if the money was just going down, down, down? Well, it's not going down. Because here's the thing to remember. At 2012, when the first halving happened, the original price of Bitcoin at that point was $658. And within 300 days, it went to, I'm sorry, I did that wrong. For that halving, the first halving, the price was, going into the halving, was $44 per block. And then in 300 days, it went up to $135 per block. So you can see here that even though they were getting 50 Bitcoin at $44, now they're getting 25 Bitcoin at $135 each. So their actual take has gone from 50 times 44 to 25 times 135. And I can actually do that math here on the table because why not? And that is $2,200 was what that was worth. And now it's worth, I got to do this the hard way. Let me do this backwards. Let me make this a little easier to get. And we're going to say 135 times 25, and when we do that math, 17, 7, and 10, and 7, and 3, 5, 7, they're getting $4,400 US now instead of just $2,200. Same thing happened with the second halving. Going into the second halving, the price of a Bitcoin was $658, and it ended up growing to $1,551. Again, they ended up not suffering any repercussions. And the third halving, this is a big one. The price going into the halving in 2020 was $86.01. So they went from 12.5 Bitcoin per block mined down to 6.25 Bitcoin per block mined. But the price started at $86.01 and it ended up 300 days later at $50,941. So that was a huge pickup for the miners. Even though it took 300 days to get there, once it got there, they were making massive amounts of money, more than they had been making at $8,600 per Bitcoin. And then at this halving here, we're entering into this at around 65,000. And we don't know where it's going to go. And again, this is not investment advice. There are people who are saying, well, it's going to increase by 5 times again. So it's going to go to 320,000. Others are saying, you know what? We may have already seen the peak, so it's only going to go to 100,000. There are others that are saying it's not going anywhere. Bitcoin's done its time. It's over. So it's going to stay at 65,000, which means miners would drop off because they wouldn't be making enough money to cover the cost of their equipment. So the important thing to understand here about this process is its brilliance, quite honestly, in that it does a couple things. It controls, there we go. That was crazy. It controls inflation because there's always ever going to only be 21 million of these. So it's not like the US government, where when we want to make something happen in our economy or with our fiat currency, the US dollar, we just print more, or we charge more interest, or we do something else. Can't do that with this. There are 21 million Bitcoin periods. So after 2140, when that last block is mined, then there are no more. The only thing we can do is trade this stuff. It's automatically rare. It's not like gold where you could potentially go do another dig and find more gold. It's not like that. It's done. It's over. There will only be 21 million. So the halving is what makes sure that it takes a long time to get there. So from 2009, when Bitcoin was started, all the way through 2041, which is how many years? 32 years. After 32 years, everything's maxed out. So it gives it a nice long flow to grow and get grounded, and then it just becomes something that we trade. It's not going to be it's not going to be minted or created anymore. So that sense of scarcity, the fact that there's only 21 million of these and it will never change, is one of the things that will always continue to drive this price off. So we know that there's not going to be any more created, so the demand's going to be high. And once the demand is high, you're stuck. You're just going to have to keep paying more and more for the scarce resource. So that is what's going on with the halving. That's what it means. That's a little bit about the blockchain and how it works. The one other little quirk I will share with you that's kind of cool, and the way the blockchain actually makes this work, is there is a code at the end of every block that is the exact same code that's at the beginning of the next block. And then at the end of the next block, there's a code that's the exact same code as the beginning of the next block. And that's how the chain is created. Those two codes overlap and it says, yep, we belong together. Irrefutable. This is a confirmed next block on the chain. There's only one road. There are no, well, there are, but they don't go anywhere. Divergences off this one road. If you get your transaction done, it is sealed in there forever. It's not going anywhere. The information's not going anywhere. So that is the scoop on the halving, why it's important, and what it actually means. Feel free to drop any questions you have wherever you're watching in the comments section, and I'm glad to address them individually or with a whole nother video. This is a big concept to get, but hopefully the big pointers you take away from this is, number one, Bitcoin is a contained universe. It's only ever going to have 21 million Bitcoin. So unlike any other currency we have in the world, including gold, frankly, there's an upper limit. And that's going to drive price because nobody knows when and if they're ever going to be able to get any of this. The second thing to understand is that there are blocks that are mined that create the reward for the miners, and that the halving is really just a way of making sure we still continue to create the blocks, but we don't create Bitcoin in an astronomical fashion. So that's it for the Bitcoin lesson for today. If you have interest in finding a little more about Bitcoin for traditionals, drop a comment below, let us know. We'll get you what you need to know. But there is a very easy way to step into this world without it being overwhelming. And I hope this was a little bit of a help for you. Have a great day, and we'll see you next week on the Cash Flow Podcast. I hope that video was helpful, and I hope you subscribe to my channel for more information on finances in your business.